Okay, we're trading the start of the New York session here, December 6, 2018. And in this video, what I want to do is share some of my thoughts about what's going on in the market. I've received a lot of questions in the chat room, a lot of questions in email. How is my trading? Some people interested in using some of my services like the trade copier, and they want to know how I'm going to be trading during this volatile time and period of uncertainty and transition. And first of all, I want to say that I'm a very, very patient trader, and I have been trading since 2001, 18 years, and I've traded through a lot of different, global uncertainty, different events, some major, some minor, every one of them. The global financial meltdown, my trading system worked just fine. We made a lot of money trading breakouts. It was very consistent, very reliable, very predictable for the most part, as we saw a lot of the carry trades unwind back in 2008, 2009, 2010. The same thing happens with political events, things like that. So the Swiss, when they pulled the peg on their currency. Now, the reason I shared those specific events that I've traded through, my trading system works perfectly in those uh, scenarios, those events. And part of the reason that I am able to stay in this business as long as I have and continue to grow my trading accounts year after year is that I know when to stay out of the markets. That's an incredibly, I think, overlooked but extremely valuable skill to actually have. And I have this conversation quite a bit with people because they're usually looking at a market, in this kind of environment that we're currently in, a lot of uncertainty, and they're looking for trade opportunities. They want to be told what they should do and how they should trade it. And there comes a point in time for all of us as traders, it doesn't matter which trading system you're using, there comes a point in time where we realize we should probably stop trading. It doesn't obviously happen all of the time, but again, when we go through these transitional periods where the market might be shifting, price structure might be shifting from providing you the signals that you normally are used to getting on a regular basis to all of a sudden being very choppy and very difficult to read, well, obviously that's the time when you need to stay out. And I learned that the hard way. I kept trying to trade in the beginning of my trading career through everything, through holidays, through times where there was the uncertainty, and I didn't know how to trade it. I just thought there was opportunities everywhere. And there is opportunities everywhere, but you have to wait for them to come to you. So just a little bit of psychology behind, the current state of the market. Be prepared for the times when you're not going to get too many trade signals, and it's just a better idea to stay out of the market. Because how many times have we all been there? I know I did it, and I'm sure you've done it. You realize there really aren't too many opportunities. It looks confusing. You're not too sure, so you go ahead and you try a trade, or you're looking at price movement, and you decide to chase it. You think there's an opportunity, it's moving, I'm going to go ahead and take it. I haven't had a trade in a while, I need some money. This is the thoughts that go running through your head. They went through my head. As a result of doing that, not waiting for a setup and having, being where I was sitting down at the desk and I was looking at a confusing chart, I couldn't tell what was going on. And then I went ahead and executed a trade anyway. And it almost never fails that trade's going to fail, right? I'm going to end up with a loss. And then at the end of that loss, when I close that trade out, I look back and I think to myself, you knew you shouldn't have traded it. Why did you do it anyway? Why did you do it? So all you're doing is compounding the situation. You're making it worse. You're thinking that you need to make money, but the market isn't always going to give you an opportunity to make money. It's going to test you. It's going to tempt you to take trades that you don't understand because of your focus on just purely trying to make money. We are here to make money. That's what we do as traders. We are here to make money from the market activity, movement. But we need to do it in a very calculated way. We need to be patient. We need to wait for the trade to come to us. And looking back over the 18 years of my career, in the beginning, I would jump into trades that I wasn't too sure about. So all I was doing was chopping up my trading account, and I would have some wins, some losses, usually more losses than wins. Now I don't do that. Now I wait for the trade. I realize and I know when to stay out of the markets. It took me a while to learn that, and now I have mostly winning trades. I very rarely experience a loss, and if I do, I can earn that loss back on the very next trade or two. I just need to wait for it. And it's usually easy because my losses are very, very small. I can detect and determine that a trade's not going to work, so I don't need to take a 55 pip stop loss. I don't need to take that kind of a hit. I can see it. And again, it comes down to being so patient and waiting for the precise moment when the market's more balanced in my favor. So moving forward, just think about that. Think about these situations that you might find yourself in if you're actually doing that. If you're getting into trades that you don't know why it's moving and it's not providing you your signal, just stay out. I know how hard that is. It's easier to say than to do. But I went through it, and if you're going through it, you've got to stay out. You keep doing that, you're going to blow up your trading account. You're not going to have any more capital to trade. You're going to have to refund your account, or you're just going to go out of business. If your family's counting on you, if your family's waiting for you to produce results, if you're looking to make that transition from whatever job, whatever business you're currently running to becoming a full-time trader, the only way you're going to be able to make that transition is by following these principles that I just outlined here a moment ago. I know it's hard, but that's one of the biggest challenges you're going to experience is controlling your behavior. That's what it all comes down to. So let's take a look at the markets. I apologize for that rant, but it's very important to get your mindset in order first. Mindset and then system. And you sometimes can't have one before the other. It's very difficult. So let's take a look at the Dow. We're looking at the Dow a while back. This was back in October. And we were looking at a price target with a range, a price range of about the 23,700, 23,800 level. It still looks like that level is possible. You know, we're looking at yesterday that solid, strong move. Obviously, the markets were closed the other day for honoring President Bush's death, but now we're set to open up even lower and to have it accelerate. So the question is, and this is what everybody's talking about, is this the next big one? Is this the next big market crash? And it's similar to just about any other market when we look at bubbles, when we look at major reversals, when the market is crashing. I traded through the global financial meltdown. We were able to pretty much determine where the bottom was. And when you can see the bottom or the top, you still need more confirmation sometimes. I know it sounds, it's a difficult thing to hear. When I first joined a lot of chat rooms back in 2001, I remember asking the chat room moderator, what do you think? What do you think? What do you think? Where do you think it's going to go? And sometimes they would say, well, it's hard to say right now. And that used to bother me. I used to think, well, why can't they figure it out? And you can't figure it out. The professional money managers at any given time are constantly trying to confirm their opinion or their execution of a trade and manage that position. Or if they're not in the market, they're constantly looking for eliminating the trades that aren't confirming, that are not according to their system. And it takes a lot of study. You need to focus in on that particular pattern or that trade or that setup to determine if it's a valid trade. And if it's not, you got to get rid of it. You got to stop looking. You got to wait for the next one. So there's that transitional phase where you're thinking to yourself, well, we can see what's going on here. We can see a strong bearish candle, but what's next? And sometimes what's next is more waiting. That's just how it goes. Now, obviously, we're day traders. I'm a day trader. I do some swing trading on the side, and I certainly pay attention to the daily and the 4-hour charts. It helps, provide the confirmation for trending moves or consolidation, things like that. The overall bigger picture, it's important. But as a day trader, I'm going to get more opportunities than to sit around and watch a daily chart. But I still need to do it carefully. I still need to be paying attention to what's going on here. So as far as what's going to happen next, obviously, the market's probably going to drop on the open. What happens next, I have no idea until the day closes. But I can watch and trade intraday carefully, paying attention to the bigger picture here. Overall, until price starts to take out here on the Dow, this is the Dow, by the way, until price starts to take out these lows and approaches that support range down here at the 23,700 or the 23,800 level, obviously, it's going to find some support here. It's possible that it could blow right through that, and that would give us an entirely different signal and an entirely different set of confirmation and outlook on the markets at that point. And that's what everybody's wondering. Is it going to take out these lows? I think a lot of people spend a lot of time trying to place their bets. That's what a lot of traders end up doing, or investors. And I get it from an investor point of view, but we're day traders again. We want to do this carefully. We want to make money. I want to be right 100% of the time on my trades. I know that I'm going to experience a loss, but by controlling my behavior, waiting for confirmation, watching the markets, studying the markets, and waiting for my trades to come to me, and then managing my behavior, controlling my behavior, I'm going to have almost 100% winning trades. Again, I know that I'm going to experience a loss occasionally, but by controlling my behavior and having that approach, it's a lot easier for me to earn back that loss on the next trade. So again, even though we have this move that looks pretty strong to the downside, yes, I would expect more, but it could continue to range and trade inside of this overall consolidation that we see here for a while. We need more information. We need more confirmation of something. One of these levels has to break. Maybe it'll come back up and retest resistance and drop back down again, and that would be another buy or sell signal. Either way, we're stuck in the middle of this consolidation range, and that's something that's it's a signal in itself. Being aware of where price is relative to support and resistance, that is also another clue. And sometimes it's just a basic clue that you've got to wait. Or have your expectations in line if you're going to day trade. So anyway, that's my thoughts here. We still are looking at this range, this support range here, and it looks likely. I mean, it really hasn't changed until it takes out that high and starts to spin around towards the overall highs of 26,951. We don't have confirmation that this move to the downside is over with just yet. Right now, I want to share my Japanese yen futures chart. I look at this quite a bit. I use this for an additional sense of confirmation on my yen trades. I've shown this chart quite a bit. You've seen it for years on my videos and on my YouTube channel and on the website. And this is the daily time frame. Again, this is Japanese yen futures. And very often I'll say that, if you get the opportunity to trade something that adds the additional confirmation of futures, volume, true volume levels rather than just tick volume levels on the MetaTrader platform. If you have that ability to see that, use it. So here we're using Japanese yen futures. In this case, if price is moving to the upside on this chart, that would indicate that the dollar yen pair would be moving to the downside. Again, Japanese yen futures strength, Japanese yen strength would mean that the dollar yen is going to be moving to the downside. That is Japanese yen strength on the dollar yen. I'll show you that in just a moment here. What I want to point out, though, is that we are sitting here at a low. It has been bouncing around off of this low several times. This low goes all the way back to the beginning of October. The next attempt here was November 12th, and then just a few days back on the 28th of November. So we're looking at a range of consolidation in here. Now, my first level, and this is something that I trade. This is a trade that I developed, a technique. It's called the continuation breakout trade. You've probably seen me talk about it in my videos. And I trade it on an intraday level basis. I'm trading it on the 1 hour time frame as well. But I apply this strategy on the larger time frames. I want to see this happen, this particular technique. I want to see it develop on the daily time frame. It is a breakout strategy. Now, one of the challenges with consolidation is that it's pretty subjective. A lot of people would look at perhaps the high here from 2 days ago and say, well, that's a high. Maybe that's the breakout level. Or this is a high where I have this orange resistance level here. They would say, that's a high. Maybe that's the breakout level. And then they'll come back over here and look at this one. And then they'll say, well, maybe that's the high. And obviously, you can go back to a turning point when the market was in a particular trend and then where it shifted. And here you see this pattern where it's a clear low, tweezer bottom, and then one clean, for the most part, one clean price swing. There's, for the most part, no stopping until it hits that high and then goes sideways for a while. That is my consolidation range. This is where it starts. This is where consolidation starts. That low, that high. In my opinion, This is the high that the candles need to close above in order for me to consider or to be of the opinion that it's a breakout and that price is going to continue higher. That's my continuation breakout strategy. That's at least the beginning stages of developing and forming this breakout. That's not the entry. Just because it breaks out, I don't trade it just because it's taking out the highs. That's another strategy altogether. I wait for the candles to close relative to the time frame that I'm looking at. We're looking at a daily chart here. Again, this is Japanese yen futures daily time frame. Now, the fact that I want a 1 hour candle, or I would wait for a 1 hour candle, a daily candle to close above that resistance point, that doesn't mean that I won't have trading opportunities here. I will. I can trade off of this support level if I get in at the right time, if I'm there, if I'm aware, or if I get a signal. One of the things that I want to point out is that I rely on the CCI quite a bit, along with other indicators, Bollinger Bands, volume, all of this. But this CCI indicator, this is Woody's CCI indicator. I've been using Woody's CCI indicator for years. Now, I don't use Woody's CCI indicator the way a lot of hardcore Woody CCI traders do. I need to see what's going on in price. I need to see support and resistance. I need to see breakouts. I need to see bounces off of support. When I see that behavior, that structure developing, then I look at the indicators. But I'm always aware, quickly, when you look at this indicator, and if you understand Woody's CCI indicator, you know where momentum and what these indicators and these histogram bars are pretty much telling you. Just by giving it a quick glance, right? By scanning the charts, I know that there either is or is not a trading opportunity. It's time to wait some more. Again, that's the biggest lesson that I think every trader needs to learn, is to know when to stay out of the markets. It may be different for you compared to another trader, the one sitting next to you. That one sitting next to you, the trader sitting next to you, might have trade signals when you do not have anything and you don't even understand it. And that's just the way trading is. There's so many different ways to trade. That's the way it works. And it was my foolish behavior in the beginning of my trading career to think that I should be in a trade at all times and I should be able to make money when price is going up or going down. It didn't matter which time frame I was looking at. And that was the craziest, foolish first lesson I needed to learn because it doesn't work like that. So again, we're going to sit here and wait and watch. But what I want to pay attention to is that it looks like we're forming, obviously, some bullish momentum down here at this support low. The fact that it's forming this bullish momentum here at this support low sort of confirms that support low. And I can see it here with this momentum indicator in the CCI, Woody CCI indicator. It also looks like it could be printing that zero line rejection. However, we would still need to wait for confirmation if we were using the Woody CCI indicator appropriately. We would still need to wait for confirmation, the histogram confirmation bar, which we don't have yet. And it might continue to travel around. It might move up a little bit and then pull back down and that kind of thing. And that's fine. That's ultimately going to allow price to move into a certain structure that's going to give me better trading opportunities, because I'm going to switch to the dollar yen and I'm going to show you how all this translates to what I'm looking at. So anyway, just be aware. It looks like we're forming some bullish momentum. It could change. Today, the whole thing could reverse, and then all of a sudden we're looking at bearish momentum. The whole thing can change. Remember, we're looking at this on we're following each candle at a time relative to whatever time frame we're looking at. Here, we're looking at a daily chart. Now, I do use the Japanese yen futures on a 30-minute and 1 hour time frame when I'm day trading the dollar yen. So let's go to the dollar yen now, and we'll take a look at how choppy it is here on the dollar yen. So one of the things that I want to be paying attention to, and you'll notice that, as I said, we're forming some bullish yen strength here on this chart. This is a Japanese yen futures. And if we go back over here, we're noticing how price has been moving a little bit lower every couple of days. And it is forming more Japanese yen strength. And at the same time, we can correlate this to what we see over here. This is the dollar. The dollar is finding some resistance. It's moving inside a consolidation, but if we go to the daily time frame, we can see that it's starting to top out here, at least temporarily. Everything could change if we get a strong day and rallies and pushes out and takes out the highs. This is the daily time frame for the dollar index. And again, it's possible that this could flip over through this zero line on the CCI and produce and indicate bearish momentum, more continued bearish momentum at this time. So it's something to consider. Things are lining up together, but again, we may need to wait just a little bit longer. This is choppy. This is the dollar yen. This is the 1 hour time frame. I've taken some trades. They've been very small, and I've had to wait. Once they're done, I wait. I lock in profits. I try to earn money every day for me and all of my subscribers. I don't like losses. I won't add to losing positions. I'm the trader that executes all of these trades by doing all of this analysis that I'm talking about, watching the markets, reading the news, studying other areas of the markets to see if they have any kind of correlation to give me an indication of what's going to happen for the day. Looking at the bigger picture, looking at the daily time frames, looking at weekly and monthly charts, looking at intraday levels, support and resistance. All of this is what goes into my trade decision. If I don't have a signal, I have to stay out. I know that there are a lot of other trade copier signal services, trade signals, things like that. And even if they're executed by a real person, a trader, first of all, you need to ask yourself, do they have enough experience to understand what's going on in the market today? Have they traded in different environment or different conditions, like similar to what we're experiencing now? And are they using a black box system? So very often, a lot of those other trade signal services will use a trade system that will show them a pattern here on the charts, and they just execute the trade. And they don't have enough experience to know how to confirm that trade. Because, and I say this very often to my coaching students and subscribers, I'll say that it takes just as much time, 8, 9, 10, 12 hours, sitting at my desk, analyzing the markets, analyzing the trades. It takes just as much time to realize that I don't have a valid confirmed trade as it does to find a confirmed valid trade and then execute. So I know sometimes I can sit here 8, 9, 10 hours and I don't have a trade. But that's a good day. I followed my plan. I didn't get into the market when I didn't understand what it was doing, and I don't experience losses as a result of that. Again, I occasionally have a loss, but I can earn that loss back quickly by following that mentality and that system of control, behavior, and watching what the market is doing rather than what I want the market to do. Very often when you get in that mindset as a trader, and we know what it feels like when we start losing a lot of money, we start looking at price and we start staring at the charts, and all we're thinking about is what we want it to do. And we're almost resisting and blocking out all of the information that the market's actually providing to us technically. Sometimes you can go back after you've experienced a loss, you come back another day or so and you look at it and go, well, there it was obvious. If I just would have been paying attention, I probably wouldn't have had a loss or experienced as much of a loss. Things like that. So be, prepared for the moments when you fall into that deep loss of consciousness where you're not paying attention to what the market is doing. You're just purely focused on your fears or your greed or your expectations, and you're just not paying attention to what's going on. I know I keep going back to a lot of trader psychology, but the reason that I do that is that it's like every other day or so, I get emails from traders that are experiencing they're so deep into losses, they don't know what to do. Like sometimes they have open positions that are so negative, or they're using other trade signal services, and they thought that it was going to be the holy grail for them. They thought it was going to be the easiest way for them to start making money, and then they realized that this signal service is executing like 27 trades within 4 hours. At the first day that they start using the service, and they're extremely negative, and they don't know what to do. Trading, that's not what trading's about. Trading is not gambling. True trading, if you want to last in this business, it is about understanding the markets and understanding why price moves, and then understanding the market reaction to it. Trader psychology. What is everybody else doing, and what is everybody else thinking? Sometimes you can clearly see it, sometimes you can't. It takes a little while longer. It's almost like waiting for more confirmation. Here, with this trade, dollar yen, I'm not really too sure what I want to do with it. I can see on the bigger picture that there's more yen strength, momentum building, and it might give me an opportunity to take another trade sometime today. I may short it, If it goes back up again, I would probably wait for it to reach resistance and then try to short it. That's my thinking and my plan for today. However, it may not give me that opportunity until later on in the afternoon or maybe even during the Asian session. I have no idea how the market's going to react to it. I need to wait for confirmation. I know how it's likely to react, but I'm certainly not going to put my money and your money, if you're using my trade copier, on the line just to guess. I need confirmation. And by waiting for confirmation, I'm always going to get my trade. And they work. They hit their targets. So just to share some information, some insight, forward looking, look for more Japanese yen strength. But again, realize we were looking at that daily time frame. It could be a few more days of bouncing around, choppy behavior, small trades. Remember, we got to get our expectations in line when we get into these trades. Look for realistic profit targets. If price is inside of consolidation, but we get a signal, how far do we really expect price to go? Right? I used to do that. I would see a bearish candle like this inside of consolidation. I was disregarding the fact that it was inside of consolidation. And I was thinking, okay, this is the next big move. It's going to go 60, 80 pips. And then I would realize I would get stopped out because I was holding on too long or it wasn't going anywhere. And I would wonder, why isn't it going any further? It's not going to go any further because there's no reason for it to go any further at this time. We need more information. The market's going to react. That's when it's going to move. That's when I could expect it to go a lot further. So we need to be aware of these thoughts and these possibilities. So let's take a look at the euro dollar. Euro dollar, I've been watching the euro dollar all morning. It looks bullish. I want to see another signal. This is the 1 hour time frame. We're looking at just 1 hour time frames now. It may give me an opportunity to go long sometime today. It may not happen in the next hour or two. I would be looking for a possible pullback. I can see that the Woody CCI indicator here has shifted to the positive side. Bullish momentum for the moment. I need confirmation of that and then possibly to trade it right back up into the 1400 level and then beyond. Several times last week and this week, we were watching price trading it into the 1400 level and noticing that it really wasn't going all that much further. And then earlier this week, it did that and then dropped. So again, it's still possible. It's hanging right around that level. It's still, wanting to test and tap into that 1400 level. It's going to take some kind of catalyst, some kind of data, economic event, something, political statement, whatever it takes at any given time to give me that signal to cause price to break out of the ranges that we're looking at. So I'm going to stay focused here on the dollar, 1 hour time frame. I want confirmation here. This is the dollar, 1 hour time frame. I want confirmation of bearish momentum on this indicator. I still don't have that just yet. It might take a little bit. And until then I would expect price to move around a little bit, but not too far. So I'm going to wait. I know a lot of people would be betting and placing their trades here, deciding whether they think it's going to go higher or lower. And I am all about confirmation. I know that price could move around a little bit, maybe 20, maybe even 25 pips without me. But when it settles and then does a pullback or something like that, or it settles at a resistance or support, I'm going to be able to trade that reaction. We've got plenty of time to find a trade today. And each one of these trades that I execute, I want it to be a winning trade. I want to close each day with a winning trade. With money every day. Let's take a look at the pound dollar. Pound dollar doing pretty much the same thing. I see this bullish momentum. We have confirmation here. Now I'm waiting for a possible zero line rejection to trade it right back into resistance if that gives me an opportunity. And again, my expectations need to be in line. If I get a bullish signal and I can trade this from, let's say, the 1.2770 area, well, I have to be respectful and mindful of resistance here, which is just above the 1.2800 level. We traded this the other day as a Tech 1 trade right into the 2800 level and just above. I said it was going to go to about 20, and I think it went to it went as high as this was the level here. It went as high as 39. I'm sorry. So it cleared the 20 level and then went as high as 39 and then stopped. I mean, again, we realized that we needed to lock in profits when we took the Tech 1 trade because we're sitting here staring at the resistance point here from last week. And it's still inside of consolidation. It's still showing this sideways, choppy, range-bound market for this particular pair. It's just going to take some time. If I tighten up the charts here, you can see this range of consolidation. It's moving around a little bit. It is taking out some of these lows that I actually had a support level back here from November 15th. And it has been pushing to the downside and clearing those levels, but not with any great significance indicating that it's time to start selling it just yet. So again, trading these bounces was okay as the Tech 1 trade, but again, we have to be mindful of resistance, and that tells me where I should lock in profits. I can't sit here and get into a trade on a Tech 1 trade like this and then expect it to go 80 pips. What would be the reason? If there wasn't sufficient data, expectation, resistance, all of that. Again, knowing that it's still inside of consolidation, that's going to tell me that on an intraday level, if I get into these trades, I want to get in, I want to get out, I want to have my targets. If I don't have a target, then I can't take the trade. That's the first thing. I'm not going to scalp this. I'm not going to get into a trade and change my plan where I'm taking 4 or 5 or 6 pips one trade and then maybe 11 on the next one and then back down to 3 on the next. That's just scalping, and I don't do that. I did that in the beginning of my trading career. There's no reason to do that. It's a lot easier to sit and wait for these choice opportunities where I know that the market's more balanced in my favor if I was to execute that trade. I'm waiting. I'm stalking the market. I'm stalking my trade. I wait for my trade to come into those crosshairs, and then I execute. And it moves right to its target, and I take those profits. And I know what my profits are. I have calculated what my profits are because I know where my target is. So I can calculate that risk to reward before I even get into the trade, making sure that it makes sense. So right now, it looks like it's still a bit choppy. Stock market is not open just yet, so we might get another wave of opportunity and more participation. At the same time, I think a lot of people are on hold trying to figure out what's going to happen next. As I started off with the Dow this morning, a lot of people are wondering, is this the next big one? Is it going to drop? When's it going to drop? First of all, we're going to have confirmation when it drops. And when it drops, we're going to be able to trade to the downside or to the upside. Doesn't matter which direction we're trading, whatever it is that we're looking at. We're going to get an opportunity. I trade what I call the meat of the move, which is the center part of a breakout. So if I see a breakout and I have that confirmation, well, first of all, I know because the event has taken place, whatever that catalyst is that causes the break. When that happens, I can calculate it, and I know that then there's going to be a trending move afterwards. If it is a market crash or a market drop, I'm going to trade that trending move after it breaks out of that range of consolidation. And it's the middle of that move where I'm going to make most of my money. So that's the opportunity, and it's easier. I'm trading in the same direction as everybody else is. I know what everybody else is doing. I know what they're thinking. I can see volume levels. I know how long they're likely to hold on to the trade, and I just follow along with it. I would much rather trade in the same direction as everybody else instead of being the only guy who's trying to go in the opposite direction thinking I'm a smart one and I've saw something that nobody else saw. I don't want to be that guy because I'm going to get stopped out quickly. If you last in this business for as long as I have, you realize that you start trading as a momentum trader with the rest of the market rather than trying to be that one single contrarian little signal that you think you see that nobody else sees. Sometimes you're going to get lucky and you're going to be able to pick tops and bottoms doing things like that. But it's a really hard way to trade, and it's a hard way to make a consistent living. It's very, very difficult, and you give back a lot of profits as a result of trying to pick tops and bottoms. It's just easier to wait for my signal the way I do it. Now, of course, this is the way I trade. There are a lot of other ways to trade the markets. Some people are really comfortable with scalping, and they do really well. To me, that's exhausting. I've been trading for 18 years. I don't think that I would have wanted to continue to trade as a scalper for 18 years. I think it would have been very, very difficult. Considering having a family and wanting to sleep, just take time off. So you got to take care of yourself. That's the other thing. To last in this business, you really have to take care of yourself and your environment and pay attention to all of that. So let's take a look at the euro yen. The euro yen, I am waiting for a possible breakout of consolidation. I've shown that on previous charts. I won't keep harping over the same thing, but this one, again, flipping over into positive territory. However, I would assume that this one's probably going to continue to go sideways. Until I get that bullish confirmation, that bullish momentum confirmation, then I would start looking for opportunities to go long this pair. This is the pound yen. Pound yen. I trade the pound yen with these continuation breakout trades, and very often when I get into them, when they develop, and they don't develop all that often, I have to wait for them, we can earn 250 pips on these breakouts. So a while back, it looked like, a few hours ago, it looks like, let me go ahead and open up the charts. It looked like it was going into, bullish territory here. It might turn around and stop right there and print that zero line rejection, and maybe eventually we'll get a bullish confirmation histogram bar here. But until then, it looks choppy. You can see that it's just creating this sideways S-shaped pattern in the price structure, and I need to be careful. Very often what you'll see in a situation like that inside of consolidation is you'll see bullish engulfing candles. Maybe they'll move up a little bit. You think you're trading a candle pattern, and then they drop right back down again. And sometimes inside of consolidation, it's really tough. You've got a high, we've got a low, and price right now is in the middle of that consolidation range. So I need to be really careful trying to trade these candlestick patterns. I'm not going to scalp it, and these things could flip around and go the opposite direction and stop me out quickly. So I'm going to wait for price to either break out of a consolidation range or wait for price to reach a significant high or low and trade the reaction, meaning a bounce off of one of those two levels, if that's in fact what happens. Or another opportunity is to wait until, and very often this happens with the New York trading session, there could be some economic data, and there could be a specific candle pattern that sets up, giving me confirmation with some of the indicators that I use, and it could be perhaps a 30-minute to 1-hour trade. And that's all. That's all it does. Sometimes during the New York session, and I prefer to execute this strategy this way because there's more participation at that time, but I just want to give you a clue or an idea of what it looks like. I'm not saying and calling out a trade here. What I'm saying is this, in that case scenario, where what I just described, if there was some economic data, if there was a situation during the, after the market has opened, the U.S. stock market has opened, we get more participation, and it means that the trade is more likely to follow through in certain situations to a move after a candle pattern. So let's just say, for example, this was one of those situations. The close right there is 143.71. Very often I would target psychological levels. Here is the 50 and here is the 20. So on this pair, it's likely that if it was backed with some economic data, and I do this quite often with the euro dollar or the pound dollar, when it sets up, and I can also confirm it with the dollar. I can see the reaction. I know why it's moving. So for the next 30 minutes to an hour after that economic data is delivered, it'll just keep moving to those expected targets. And it's very, very easy, and I use the high of the current candle as my stop loss, meaning that I'm using a really small stop. Now, again, I'm not saying that that's happening right now. The stock market is not open. This is not one of those situations. It's just showing you the pattern and how it works. But this is not one of those classic situations. This is also the pound yen, and I would prefer to follow that 1 hour or 30-minute strategy on the majors, either the euro dollar or the pound dollar. So right now, I don't have a signal, but I am anticipating getting some decent trades today. So keep an eye on that. But I just wanted to make this video, first of all, to give you some perspective as far as what I'm looking at on the bigger picture, what to expect. Get your mindset right. Relax. You're going to get your trade. You're going to get an opportunity. If you don't have a trading system in place, if you're joining chat rooms, using signal services, you're not making any money, and you don't have a trading system in place, stop trading. Find somebody who has something that's working. See if you can learn from them, or use a signal service like mine. A signal service like mine is that I am trading for you. I'm using my trading system. You can learn my trading system. I actually have my trading manual inside of the members area for the trade copier members to use them. That way they can learn, they can use it. They can learn my trading system, read my manuals, watch the videos if they want to. But you don't have to. You don't have to understand my trading strategies to a level that you could execute the trade yourself. I would recommend you understand what it is that I'm doing if you're going to let me trade for you by using my trade copier. I think it's important that if it's your money that's on the line, you should know what the hell's going on behind it, right? You should know who's trading for you and what he's doing. So again, I would take some time, if I was you, if you were considering my service, to just get a good understanding of what I'm trading. My principles, my psychology, my thoughts, and just the way that I do it. How I run my trading business. I think it's important if I'm going to be trading for you. But again, if you don't have a trading system in place and you still want to trade the market somehow, a trade copier service like mine is probably the best bet while you're learning how to trade. You can then take the option later, as you're making money with my service, to learn these strategies and eventually execute them yourself if that's what you want to do. But you certainly don't have to. Be very careful. One thing, though, I want to end here is to look at the larger time frames here, and I want to point out a few things with the tight ranges of consolidation that we're looking at and the possibility of eventually some breaks. We're looking at the euro yen. This is a perfect example looking at this squeeze play, looking at consolidation. I'll go ahead and open up the charts here. And you can see all the way back here, this low here is November 12th. And since November 12th, and we could argue that this is some consolidation as well if we stand back on a bigger picture, but right here, since November 12th, we've seen a lot of this choppy consolidation here. I mean, that's just obvious. This is a daily bar. These are daily candles here. This is a daily chart, Euro Yen. This, when I look at this chart, I remind myself that, first of all, I probably shouldn't even trade the Euro Yen. It's too choppy. The more you trade it inside a consolidation like this, the harder it gets. Trade systems usually break down a lot more, usually, inside of consolidation. It gets very hard. People continue to stare at a chart, and they keep on trying to trade it. Back to that original concept that I said at the beginning of this video, you got to know when to stay out of the markets. A situation like this, looking at this chart, you got to know when to stay out of the markets. That's the first thing that I think of. And I probably won't have too many trades on this pair until it breaks out. But notice what's going on here. We are trading inside of this price swing here that developed that low here. That's August 15th. I keep going back to that August 15th because on every chart that I look at on the daily time frame, August 15th was, for the most part, a pretty key low. You can go back to August 15th and find out, watch the calendars, read the news there. And then here we have this solidified resistance point that started right there. That was toward the beginning of September. Let me see if I can get that candle there. That was on the 21st, that high. And you can see how many times these daily candles sort of stopped right there. I mean, nothing else was going any further. So we're in the middle of this range, and we're also in this tight range of consolidation. There is going to be a break, and it could be a head fake when it does break. You'll notice the Bollinger Bands coming together on this squeeze play. You'll notice bandwidth at its lowest levels that it has been in a long time. Again, we could possibly see a breakout of this range. It's due. It is due. One thing is a fact. Low volatility is definitely an indicator of high volatility. And just the same, in the exact opposite, high volatility is definitely an indicator of low volatility. I know a lot of people try to look at volatility in relative terms, meaning they're looking at volatility on a relative level throughout the trading day, even when they shouldn't be trading it. And in my opinion, that is not the way to look at volatility. It makes it very confusing, makes it easier to experience losses. The way I use volatility on with these indicators at these levels is at extreme levels, either extremely low volatility or extremely high volatility, because both of them indicate either the end of a move or the beginning of a move. Using the appropriate indicators here for the Bollinger Bands, the Bollinger Bands are going to help you identify that. However, I do want to leave you with one point here. When we get the breakout, it doesn't necessarily mean that it's going to continue in that direction. There are very often head fakes with breakouts. It'll fake out in one direction thinking that's the breakout, and you'll get the indicators and the movement and the confirmation there, and then it reverses. Why would that happen, or what would indicate to me that it would be a situation that I would need to stay out of? First of all, I would confirm it on the smaller time frames if I was going to trade it. But noticing that price is in the middle of this price swing right here from the October 15th low to the November 21st high, that still tells me that it's still likely to be a little more choppy in here. It could head fake to one direction or to the other and still continue in the overall bigger picture in a downward direction, if that's in fact what's going on here. If we tighten up the charts, we can see that it's been in a down trend. Obviously, that last high took out some of the previous ones, but we're waiting here. We're waiting to see which direction it's going to go in next. So be prepared for that. Be prepared for the possible head fake when it does break out of that squeeze play.